All right, guys. We are here, and I'm excited tonight because we have a special guest on. As I've been mentioning, trying to get this guy to come out of retirement for a little while now. He's definitely, I'm a big fan of his, right? You guys all know that I absolutely love Jack to death. I've been trying to get him out here. I couldn't even hold a secret. I told you guys that I had somebody special coming on, but I couldn't tell you actually who he was, and I even slipped and said, "Yep, Jack will be here," because you guys kind of knew. So I wanted to bring Jack out. I've been dying to get Jack out on a Tuesday night, and here's why. So I met Jack a few years ago, and he's one of those guys that's a very, very rare individual that he is just an absolute master of Fibonacci. And there's not many people out there in the world that can say that they've really mastered the insides and outs. And one of the biggest problems with Fibonacci is the way that you draw it. And Jack has a very interesting way of drawing it, and he's just an absolute phenomenal trader. The guy last year went to I'll let him tell the story about where he went last year, where it was super warm. I'll tell you right now, it was not Chicago, but I'll tell you right now, the guy just was on absolute fire last year. I actually didn't think he was coming back. If he didn't have a serious relationship, I'm pretty sure he would not have come back to Chicago. But it is what it is. And another reason why I wanted Jack in is because you guys know I'm definitely all over the currencies. Love forex with a passion. It's what I do. I don't follow gold and I don't follow oil as much. The last couple of weeks, we've been setting up oil trades and they've been working out just fine. Jack is an absolute master at oil and gold. So it was kind of a my treat to you guys with going into December to get Jack out here. As well as Jack is, if you guys haven't figured it out yet, based off of the screen right now, Jack is coming out of retirement as well. He's bored. He wants to get back out there and he wants to educate people. And again, it's as I mentioned last night, being an educator it's a huge perk when we see our students succeed, and Jack wants to come back out and start helping people again. So the name of his new company is going to be Startup Trading. You guys can see his logo over here. Again, go over there, go on YouTube, guys, give him a follow, subscribe to his channel if you haven't already. He just opened it back up again. He's already got 176 people. So go out there and definitely help support him, and maybe he'll come out more often and give us some insight on Tuesdays. And with that, everybody should be able to see Jack's screens right now. These are his charts, not mine, obviously. You guys know I'm not the biggest fan of Toss, but obviously, Jack is he's a pro at it. I'll figure out how to get him off of it in the next year when Schwab says we're shutting Toss down. So maybe he'll come across. So with that being said, Jack, go ahead and take it away. You can tell the group a little bit about yourself. A lot of them know you, but I'd say there's a fair amount that don't necessarily know who you are and kind of what your story is. So go ahead and give them the story. We got some time tonight. And then obviously jump into some indices, oil, and gold for us.
Okay, no worries. Yeah, guys, glad to be on here. Some of you might have known me as I previously taught, but Brian and I became close over I probably know Brian for about 3 years now, and invited me to come on. So I'm super excited to share what I have here and help you guys in any questions that you might have for me and my methods of technical analysis. We've had some really interesting markets, especially after today and yesterday, and I'm going to be able to point out some things that are absolutely incredible. Quick backstory on me for those of you guys who don't know me: I've been in the markets for 15 years. I bought my first stock when I was 15. I turned 30 a month ago, actually more than a month ago. It's been quite the crazy journey. It's basically the only job I've ever had. Outside of a last real job I had was a pizza delivery guy, believe it or not, which is kind of funny. I've worked at prop firms, family offices, equity desks. So and now I just trade for myself. And this is my day to day. I live and breathe trading. I specifically like to focus. I'm more of a technical analysis trader. I do pay attention to fundamentals. However, the time frames at which I'm trading. Fundamentals do not necessarily have an effect upon my entries, but rather they do obviously move the market and create a general bias for the market as well. So that's just something to always be aware of. I'm going to be sharing and taking questions from you guys. I know Brian wanted me to go over gold and oil and my thoughts on both of those. Not only am I going to be talking about current sequences that are going on in the markets in my projections based on where we're currently trading, but I'm also going to go into the history and show you guys how I look at Fibonacci sequences, how and why they work, and what you can look for in the future to apply them to your skill set. So with that being said, I guess we can just jump right into the technical part because that's why all you guys are here. As far as the chat goes, Brian, do you want to read questions to me, or do you want me to check them out on the Discord?
Yeah, I mean, everybody basically goes through Twitch, so I can read them off when I see questions when they come in.
Okay,
There's
cool.
a little bit of a delay, so they're about anywhere from 15 to 20 seconds behind you. So when I see them, I can type them across to you, or I can just chime out.
Okay, sounds good. All right. Well, with that being said, guys, feel free to ask your questions as we come along. We'll get to them when we can. I am going to start off with gold, and let's talk about kind of the history of gold, right? Like gold, is really the only true form of money. Now, this is as far back as I can go on Thinkorswim right now on the gold contract. And the last time we had an absolutely ridiculous run was 2000. When we had started having balance sheet expansion. So just to give a little bit of fundamental background, we have what's going on in the market is known as not QE or not quantitative easing. We've had 3 rounds of quantitative easing that the Fed basically comes out and they pump money in the markets, to the repo markets, buying bonds, all sorts of different ways they are pumping money into the markets to keep them afloat. And that's actually what initially created this balance sheet. The balance sheet expansion created this move because when you create more dollars, it takes more dollars to buy the same amount of gold. Gold is a hard asset. It's the only asset that we can track back throughout history, literally every civilization. And there is a new round, and they're not even calling it quantitative easing anymore, that just started, I think it's like 2 months ago now, which is now kind of fulfilling this prophecy of gold moving up to its next level. So I just want to point out, this is, we're going back. This chart is all the way on the right, 2020, all the way on the left, 2000 tech bubble. So one of the things that you can just point out, the low of is actually in 2001 on this chart. Obviously, gold at some point before 2001 traded at a lower price, but that low to the high, to the high of 2011. Traded back into the what's called the 50% retracement. So for those of you guys who do not know how Fibonacci's work, Fibonacci's numbers are basically a set of mathematical numbers that are naturally found in the world. So things like seashells, plants, even the way our body is created. The numbers and sequences are so natural in the world. 50% is actually 50 is actually not one of those numbers. It just happens to be the halfway back of any move, which is typically like what really these are what institutional investors are looking at. There is no coincidence that if you look at a chart of gold, we came 50% back and then basically have been rallying ever since. This has happened before, over and over and time again. And I can even go quickly to the S&P 500. You know what? I actually don't
Jack,
even
I'm gonna
know.
interrupt you real quick there. And if you guys noticed, Jack, bring that chart back up again that you just had up there.
Gold one.
Yeah. Hey guys, look at this one. This is one of Jack's best strategies. He absolutely loved this one. You guys will hear this as 50% retracement. If you guys happen to look across where that teal line is, look what happens to be right standing there, a demand zone, right? This is why I absolutely love talking charts with Jack, because a lot of times you'll use my supply and demand strategies matched up with his fibs, and we end up hitting the same exact areas.
This level right here.
Yeah.
Yep.
Yeah, so it's amazing. So I tell these guys that there's multiple ways to trade this. You can get to a destination many different ways, and it's just literally which one fits best with you. But that's why I just absolutely love looking at charts.
Yeah, absolutely. I like to really look for those confluence zones, and when you teach demand zones, like ever since you brought up demand zones to my attention, if I can line them up with one of my levels, I feel even more and more confident. But just to put on a larger scale here, guys, the upside profit target of this move in gold is 23.17, and you can bet your bottom dollar that target is going to be hit. It absolutely will be hit. And there's a interesting way to look at gold and the way it relates to the purchasing power. This is the purchasing power of the dollar, okay? Because this is how many dollars it takes to buy gold. So really, it's the only way to value the purchasing power against a hard asset. There's no other way to value the purchasing power against the dollar. You can value it against another fiat currency. So you can value, gold versus, the dollar versus the euro dollar versus a Great Britain pound versus a Japanese yen. But against a hard asset, you can see that really it's taking more and more money, and this is the devaluation of the dollar. This is what's happening. I actually posted on Instagram today, for those of you guys who don't follow me, this is a startup underscore trading. between 1776, founding fathers, right, United States, and 2007, there was $7 trillion of money created. $7 trillion of money created. From that point forward, we have now created $15 trillion. So from 2007 to 2019, 2020 soon, so almost 13 years, we've created $15 trillion. And going back before that, we actually created only 7 trillion. So what's happening is a monetary system, in order to continue to work, and there's tons of this stuff, all really interesting stuff about all this online. I'm not really a total expert, but just a little background. It is totally expanding. And with that being said, we are going to be getting this move up here in gold. Now, back to the technicals and back to the trading. How do we make money off this stuff? I'm going to move on to a daily chart and show you guys a couple of sequences that I look at and pay attention to. Actually, let me go to a weekly. It'll be a little easier to see. Anytime a rally begins, what you're looking for is an entry, right? Or when you determine what you think the direction of the market is, you want to get into the trend, right? So in 2018, right? I can't believe we're coming to the end of 2019. 2018, we bottomed out in August in gold. And from that point forward, that low in 2018 to that high first traded. This was the first entry into the long trend. If we stay above this yellow line, that's the 61.8% retracement. I consider the trend intact. As long as the trend and price stays above those levels, I anticipate the negative 23% profit target for being hit. We traded into those levels at 1206 and ran all the way up into the end of 2018 up to 1264. So in futures contract terms, that is roughly a $6,000 trade per contract. And the risk here to the downside versus reward is a 6-to-1 risk to reward ratio using this strategy, because if you run a contract to its profit target, that target is 6 times the size of a stop. One of the things, especially billionaires, hedge fund managers have in their trading is massively outsized winners. Okay. And you can even say Warren Buffett. I mean, he has massively outsized winners, positions that he's been holding on to forever that have just compounded gains. And these are the opportunities, although few and far between, do provide a 600% return, which is, or 606 times the amount of risk you're putting down. So if you're risking 10%, you're returning 60% on that risk relative to your portfolio. This move happened once here. And then after we hit our targets, we started running up into what most likely Brian would determine to be a supply zone. So where we had broken down and off from. Now, I could go deeper into the fibs here, but let's just call this a supply zone as Brian teaches here. We fall back from that supply zone and then come all the way down into the same setup. Okay, that full 50% retracement from that previous low to high. So we go low, wrong box. Low to high, target completes. Once that completes, we take that low and then we take it to the next high. All right. When we come down into that level, what did we do from there? We had one of the most incredible runs. I was actually long gold, and I was talking to a friend. Gold broke out of a multi-year wedge here. This is a multi-year wedge that gold has broken out of this year, and this is going to be a continuing theme moving into 2020, guys. We have been sitting inside of, and these patterns, especially on the higher time frame, exist. This wedge, you could say, started forming in 2013, started forming in 2013, and broke out 6 years later. I mean, that's just incredible. Broke out 6 years later. The price target projections on the Fibonacci sequence are significantly higher, 2,300 in gold, okay, 2,317. Now, what's happened here is the buying in gold has gotten so aggressive on the weekly chart this year. It got so aggressive. There was this massive breakout in June. We consolidated, and then we had an entire second leg. Now, when you and this is one of the things that I typically teach in my courses, but one of the things you'll see happen especially on these higher time frames, is when you get through these profit targets, we begin going from the prior high. So that's February to high. And you can see we pull back into that 50% retracement. That would be your entry. And that's your target. Now, this setup has occurred again. So there's it once and then twice. We have been consolidating on in gold at the 1457 level for the last few weeks. Okay, we are breaking out this week. And why are we breaking out? It's important to note the futures contract rollover. We spent 2 weeks consolidating inside of this. As soon as the futures rolled to the first contract of 2020, so this is the first opportunity for the futures to be highly liquid moving into 2020. So like people are rolling their futures contract. For those of you guys who understand how futures work, basically this one expires. Okay, the contract for 2019 expires, and we roll into a contract for 2020. As soon as that happened, those new players, those hedge funds, those institutions that pay attention and understand how these sequences work, start bidding the market. And it is absolutely no coincidence that gold began bidding immediately off that level, 1457.4. What's the low of that day? What's the low of the contract? What's the low of the last 2 weeks? We immediately began a bid and started ripping higher. Okay, we started ripping higher. This ultimately is going to have a profit target just off this sequence up at 1615. And if we can break out of what I'm sure Brian would consider a supply zone up here at 1515, we can really take off here. So gold is something I'm paying heavily attention to. I'm just going to quickly go over silver, and then we can take some of your questions, guys. Silver is in a very similar setup. There was an explosive rally, absolutely explosive rally in 2019. Silver went from $14 to $19. This is one of the biggest moves in silver we've had in years. Okay? It's absolutely massive. From there, we traded all the way halfway back long. This is an opportunity to reload those entries. This is a gift. This is a gift to traders who are paying attention. Silver's profit target from the 1680 level is all the way up at 21. Okay? It's all the way up at 21. Once again, silver broke out of a multi-year wedge. I'm going to go to a 10-year chart real quickly. We had this multi-year wedge. You can just see it building and building and building. You see that trend line to the downside, trend line to the outside? We break out of this multi-year wedge. It's a huge consolidation. This consolidation here is 3 years. We rip up, we pull back. There's your entry. We've been sitting sideways. Futures have rolled over into the first contracts of 2020. And now you are starting to see the accumulation finally start shifting prices higher. So quickly on the higher time frame, that's what I have for gold and silver. I'll give if there's any questions or anything, I'll give Brian a chance, or maybe if you just want to come on and talk markets, and we'll take it from there.
Yeah, I'll give them a couple minutes. Like I said, they're a little bit delayed. I know one thing that we've been looking at a bunch is basically the situation with China. And gold, I keep telling them the gold's in a very interesting situation because gold and silver are not only used for hedges for inflation, but also as an industrial metal and things. And obviously with China slowing down, it's interesting because we're seeing all this strength come back into gold. Every time, we get a tweet and something bad happens, people start rushing to gold. But then now we're seeing China's growth go down. That I told everybody that, my opinion is that it's really just all a game right now, that, Trump is kind of holding that kind of the trade war over our heads just for the election. And that when he needs that big boost, that thing's just going to come through. And I see some big movement in a lot of these things, the indices, but particularly gold, silver, and the dollar. I see just going absolutely crazy once he finally decides that, phase 2 of, trade war is coming to that, to that piece, What's your opinion on that?
Yeah, well, so the whole thing with China, if you read the document, I mean, China's put it out there, China 2025, they've put it out there what they want to do in the world. And one of China's goals, and by the way, they're pretty good at getting things done that they want to do. Their politics are, although they're communists, they effectively execute on the decisions they make. You want to watch something fascinating? Watch their military march this year. I mean, it's just a whole nother world out there. You wouldn't believe it being from the United States if you don't pay attention to things like that. But China's goal is to replace the US dollar with a world-denominated currency that has a Chinese currency as one of the main backers. And now we're moving into a current cryptocurrency, Jace. I truly believe that there's really no exact timing this stuff, but I think in the next 20 years, and that's obviously a large time horizon, we are going to lose the dollar as the world reserve currency. And that is when everybody talks about, things hitting the fan, or, I could say another word for there, but when that happens, and I don't know when it's going to happen, and this trade war could be the trigger for it happening. Okay, because all of a sudden, this trade war escalates to the point where the Chinese economy exists separately from the United States economy to as much as possible, which very well could happen. And it's just a total standoff. We are going to be losing all of that trade, and the dollar is used for international trade. As soon as the dollar stops getting used for international trade, all of this money that we are creating, that we are right now not seeing the effects of. We are not seeing the effects of any of this cash creation. The $12 trillion that I mentioned has been created since 2007. Is going to hit the fan, and that's when gold is going to it's just going to absolutely explode. And these sequences that you're seeing right now are some of the best entries that could exist for the next decade. I mean, that's the issue that people are not. I mean, to me, in my opinion, regardless if we win the trade war or not, it doesn't matter. Or win it, I don't even know how do you define a win. Really, what is definitive of a win? The monetary system and the way it's expanding, which the amount of the deficit we're running up is going to hit the fan. And I mean, I just trade, but this is going to happen. That's my belief on it.
It's funny because that's like thing. It's kind of like the same opinion. It's like we had Brexit, we have one leaving now. This will be the groundwork for other people leaving. I mean, it was talked about before when there was the pig situation with the smaller countries leaving. I mean, when you understand the economics and really what fluctuating your currency rates does for you, it's kind of the same thing. So I was like, blow it up. I'd love it. Give me more currencies. There'll be a lot more volatility, a lot more money to be made. So it's kind of one of those things. So all right, guys, before Jack jumps into any indices, I was looking through. There's a couple questions out there, although some of the advanced members in the chat seem like they're answering for you pretty well. I don't want to take too much time of your night, but I'm going to switch charts real quick, guys. I'm going to switch over and there we go. All right. I don't have the scanner on there right now. Let me resize that for you. All right. So what you guys are seeing right now is you will see the Forex Factory, basically the news dashboard. Okay. Reason I wanted to do this before we had Jack come in is basically kind of setting up tomorrow. So as you can see today, not a whole lot of movement in the euro, the pound, both. I mean, the euro was up 8 pips, right, in 24 hours. The pound was up 64, so it didn't do bad. It got, about 75% of its ATR. Yen put some work in today, and it was down 59 pips. Swiss was down 49. CAD didn't do much. Again, not necessarily surprised. I think everybody's waiting until tomorrow. Aussie had a little bit of movement. Again, we just had Aussie news a little while ago. Euro pound, again, pound strength coming back into the market. We had called that as well as the pound yen, although pound yen only did 7 in 24 hours, so wah on that guy too. Just, again, we need Brexit, and again, not a lot of Brexit news today. But this is what I wanted to talk about, is what we're setting up for tomorrow, because tomorrow's got a lot of news. And you guys know I absolutely love news, and it's something that all traders need to watch out for, especially when you see ADP, non-farm employment. It's something you have to be aware of. Now, 8:15 is a little bit early in Chicago for Jack, although he is in his 30s now, so that means he's eating dinner at 3, waking up at 5 every morning, or he should be pretty soon, right? Again, we got to watch out for that number tomorrow morning. That's going to be a big one. Make sure if you have overnight positions on, you guys are prepared for that one. 10 o'clock is where a lot of stuff starts kicking in. That ISM number on Monday really set the market tumbling just through the floor. Again, now we have the ISM non-manufacturing PMI tomorrow, but it's also coupled with the Bank of Canada's rate statement and their overnight rate. So not expected to change, but some of the numbers have been a little bit mixed out of there. I'm interested to hear what that statement has to say about if they will cut further. A lot of countries are cutting. Nobody's raising right now, so it'll be interesting if they talk about that. 10:30 a.m., that's where we have oil coming in. And again, I'll pull up an oil chart, and I'll kind of actually, you know what I'll do? I don't know, Jack, if you can see maybe jump on Twitch real quick, and then
yeah, I'm looking at the comments. I got it pulled up now.
Okay, cool. So this is here. I'll show you, Jack, and you'll probably laugh at this, but this is how I've been kind of analyzing oil. Okay, I've been just taking it at a very kind of top-down approach, right? Very kind of just Simple, right? And I'm just showing, whoop, not that one. I want this one, and I'm pulling this one out. There we go. And you can see I've been literally just pulling charts over here from TradingView and kind of just pulling like high level kind of stuff. And one of the areas that we talked about last week, guys, and again, last week we didn't get as much movement. We talked about on a daily, we had areas, we had an area of selling there. And again, you guys can see how it literally tickled that zone and just dropped away from it. And again, didn't have much, but look at this explosion down here. Again, zone was never busted through the top side, came right out the bottom. Now, downside, again, kind of a similar situation. We were looking at this area, right? And in fact, we had another area just below it, but that's kind of where we're looking. We respected it here on this most recent drop, all right? Dropping this down, and again, I'm just going to do this real fast.
Yeah, Brian, nobody can see your charts. I thought it was just me. I was,
oh, you know what?
It's a delay.
Nope. Yeah, hold on.
Yeah, we got the, I'm like looking at it and going.
It's over here. Oh, hold on. I changed all the desktops around. Let's see. There we go. All right, so let me go back to the daily one. All right, so here was the daily chart. Just real fast again. Here's that drop-based drop that we talked about before, right? We've respected it. You guys can see we drove straight into it at the end of November. We held, right? We were hoping for more of an explosion last week. Didn't necessarily get it. Bam, it came, right? We ended up getting it late in the week. And what did it do? It went right back to where the profit target was. So I know some of you took advantage of this one. Again, hourly. Okay, we like this zone, this demand zone at the bottom. We kind of tagged it here again. Great profit target for the second piece, right? It was a launch point here, went up and hit the profit target up top, went over, gave us a red, green, red, and then all of a sudden we were taking shorts, and bam, came right back down again. We missed the profit target just by a little bit, but after a day like that, you would have gotten out expecting the retrace, right? Dropping down to a 4-hour. Make this a little bit bigger for you guys so we can see it. It's up. All right, so dialed down a little bit lower, you can see, again, the daily wouldn't have hit, but the 4-hour profit target would have. Okay, this would have been our profit target. And again, that's an area that we got to start looking for sellers tomorrow. Or I'm sorry, for buyers tomorrow morning. Let me change this so we know what time frame this is coming on. We'll change that to a yellow. Now, top side, again, we still have this daily zone up top that we may want to watch out for. A little bit of a gap over the weekend, but I'm probably going to put something sitting somewhere up in this area. We just had way too much movement off of this drop right here to just completely ignore it. So again, see if we can refine it anymore. But again, there's going to be my top and bottom for any type of a new spike, looking to take somewhat of a retracement. Dropping it down to an hourly, you can get a little bit better of a picture. Now you can see here's where the gap actually kind of kicked in. So the top zone is still good. If we get any type of a spike up, again, I think we're a little bit far where price is not going to run into there before news. If it is, it's a heck of an overnight. But if we get any type of spike up, I'd be looking to start taking shorts. Again, you can take these in Nadex. Again, it's early enough in the morning. We may be able to get some type of a 2-hour or something really, really short term in there. But again, we are somewhat closer to the bottom. If we can drop, I don't know that we can drop that much overnight, but it is possible if we kind of whittle our way down. Again, here's kind of where that gap is. So again, you had to predict that it was going to come into that area. So there may be a bit of a kind of a setup in here, right? We may have something along those lines. Again, nice little kind of bounce over here. So the way that it's looking right now, if we can get some type of an overnight kind of tick down, even potentially over here into the 55, kind of 80, 55, 75 area, I may be willing to take a Nadex out of the money position, something up in this range. Figure we can get a nice $1.25 on a spike throughout the day. That puts us, back over in this area, in this territory right here. So if we can kind of rally down kind of fall down here, down into this area, I'd take something long up in this area. See if we can get 3-to-1, maybe a 4-to-1 risk to reward ratio trade set out of that one. If this kind of falls overnight. So that's what I got. Just kind of a big overview, looking at supply and demand, looking at previously formed zones. Jack, you take it back over again and give us your analysis now.
Cool. Do I have to do anything to share my screen, or can you do that?
I just pulled them back.
Okay.
There you go. James is like, CO was the paycheck of the month. Yeah, James, you crushed it last time.
I gotta say, I took Friday off, so I did not do anything.
Missed that drop?
Yeah. I missed that drop, sadly speaking. Even though literally I had it set up as in a short.
Yeah.
Because we broke sequence, and I'll go through the sequence that we broke. Really, I mean, that drop came from a much higher time frame draw, which I want to go over here. One of the things you'll notice is there's something such as participation and there's times where things break and there's times where things don't. As you guys know, like technical analysis, one day it looks amazing and the next day it's like, oh, wow, does this stuff even work anymore? And that's why you always want to have enough room in your trading for errors, because guess what? It's the stock market or whatever market you're trading, forex. It's not always going to be perfect, but in this case, it was. So there was a sell off.
Hey Jack, hold on one sec. Look at that, guys. Look where Jack's 50% is drawn. And again, part of the science that Jack has is where he's drawing his zones from. And if you guys love what he's doing, again, make sure you go give him a like and follow him. But look at that. See where his 50% is, which is a big kind of selling point for him. Look where it just happens to coincide with. So Jack's kicking himself.
Supply zone. Yep. Yeah,
Sorry,
the double whammy. The double whammy. Supply zone. So I have these little dots in here that kind of like mark up supply zones that I like as well. I kind of use them to, like I said, you kind of taught me supply zones, and I just created a little thing for that. But so we have this supply zone up here where Brian teaches, but at the same time, it's good to have confirmation, right? And the other thing is, tops don't just happen immediately. Very rarely do you just trade up into a level and then just can totally get destroyed outside of like a hyper volatility event, like drones crashing into, oil barrels in the Middle East, like we had here.
Allegedly.
Yeah, allegedly. But which, by the way, was freaking hilarious because we literally, first of all, if you look at this high here, this leg start,
Yeah,
which
exactly.
is called, like, it was literally like, I looked at that the next day. I mean, I was never gonna touch oil when it gapped up like $8. Like, sorry, I'm not trying to wipe my account out, but we went right in that level, double topped. And the day before, it was kind of funny. We were actually holding a halfway back long right before. Halfway back long, weekend closes. Guess what? Yikes, target. So it's always interesting when things like that happen.
I actually called that top on that Monday on that charge school. I was like, yep, I'd be doing nothing but selling this right now. Look where it happened to go into on the daily. Yeah.
Just crazy. Yeah. Yep. I think it was a $13 move from low to high or something like that. It was
crazy. Yeah.
Yeah. I mean, it's not something I want to trade, but once it calmed down, even then it was wild. That range on that day was, let's see, $4.61, which honestly isn't
crazy. Yeah. I mean, it was kind of like, oh my God, 5% of the production in the world is down. And I'm like, yeah, but so what? And then and we had nothing but inventories of like more and more and more after that. So it was pretty funny. And that was kind of my take on it. It's like, yeah, so what? It's 5%. OPEC tried to play a hard game and they don't really control the world economy anymore as far as oil goes. And I'm like, for what? I'm like, who cares? Russia's going to be like, yeah, we'll produce 5% more. I don't care. And it just collapsed. It was like, man.
I feel you. I mean, it was freaking amazing. But so there was this 50% retracement short here, which is highs of the year, which go back to April of 2019 to that swing low, which we're still stuck between that high and that low that happened. Volatility was super high in oil, and that is on June 5th. Okay, that 50% retracement on a first test, there was a demand zone right there. That was a little sloppy. We ended up breaking above that 61.8, which is considered a failure of the draw. But then you can see we actually never closed the day up there. You can see all of these days really closed right up that level. But a lot of times when draws are this big, they're important to pay attention to if they come back into play, especially if you have a consolidation like we have. Like you see, we trade up in that level here. We see price rejection. We trade up in that level here. We see price rejection. We even saw consolidation after that oil jump, and then also up here. And not only is that just a fib level, but the more tests that level has, say if the first test is fib sellers, well, guess what? The second test, there's going to be supply side sellers, and then so on and so forth. So the more, when we have multiple tests of that level, not only is that level there because it's just a 50% retracement of a corrective move, but it also becomes a general supply zone because we've tested that level so many times. Now, opposing that, so we have, supply zone here, from Brian, that Brian teaches. So that's right touching in the supply zone. You combine that with the fib. On top of that, now we have, it's always important, what's the opposing side of the trend? I always like to pay attention to what's the opposing side of the trend. And that is a long setup. And that was from the October 3rd low. So that's the beginning of the rally to the October 28th high. Okay, that traded a halfway back, all right? Same thing, 50% retracement, What does it line up with? Boom, supply zone. Like literally, if me and Brian could somehow figure out to just, hey, dude, I got a level, do you got a level, and we just took those levels and you guys took them too, we'd probably take over the world. But that'll be next week.
2020,
So
got to
we have,
save something for then.
yeah, we gotta save something for taking over the world next year. But yeah, so we have this 50% retracement long, which had an incredible reaction. I mean, that whole, I mean, oil's been great. I mean, it really has been great because we've been selling off trading levels and then, reversing the entire other direction. Multi-day, 4-day sell-off, and then a 2-day rip. We're right above those highs. That profit target was 58.28. So the full 50% retracement basically for the year, 58.60. The profit target of the long, 58.28, and then you have a massive demand zone that we broke down and started a huge sell-off from as well. So you have, 3 levels of general just reasons that, hey, it's probably going to be pretty tough to get to this level. Well, how do you know when to enter? So this is where I go down to the smaller time frame and really begin paying attention to the sequences that exist. Now, oil, this whole move, I'm not going to go over it in like great detail, but basically there was a high to high extension here. Okay, this high to high extension traded here, and then we blew out of targets, and then we had extension to extension. When that extension to extension broke, and a lot of times you'll see this, you'll break a sequence. So this is if oil was going to continue to go straight up and rip through that supply zone and rip through that resistance level, we needed to go straight up inside this series. What ends up happening is we break the series of moves higher, the sequence that needs to hold. We end up creating a double top situation. Okay, we end up creating a double top situation. Going into that double top, there was a halfway back long here. Okay, we broke above the short, we traded the short, broke the short, traded the long, double topped, broke the long, and as soon as we broke the long, this is the first move in the setup after a long break. So you break the 61, the trend flips. All of a sudden, all it is, from a low, you go from a low to a high, break the 61, the trend flips, you go to a high to a low. Okay, that's what these computers do. That's what these algorithms do. They say, okay, we have more sellers and buyers, time to flip the trend. Now, initially going into the Wednesday close. Now, if you remember, Thursday, obviously Thanksgiving, so the markets, did not have full participation the entire day. You can see sellers came in Wednesday at the close. Again, right before the close on Thursday, which just the futures were open, we traded that level, the reaction, and then we pierced it into the close. It was a very quick short squeeze. What level did we run into? It's that old Fibonacci profit target, that 58.28 that I talked about before. Anyway, we ended up consolidating below. You can see we're just doop, 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 wham, and then literally straight down in that hour, $1.70 through negative 61s, all the way back to the bottom of the range. And since we've traded the bottom of the range, that high too low is our current resistance level. That's 56.66. And basically right now we're just in a massive range, and I would have this, it's truly the shorts are the only thing holding right now. We can actually reconfirm shorts here. This is a valid short setup at 54.61 for the time being. But I have valid shorts right here. If we break above 57.05, I'd look for a full retracement long or follow the sequence up.
Yeah. Check out, I don't know if you're looking at it, check out the comments. James has actually he's been our resident oil withdrawer. He's got 3 inside guys according to, what the current word on the street is.
Yeah,
but,
I love that.
He's been killing it.
I love that. James is the oil man. James is the oil
He
man.
absolutely is. He said
James.
he's combining supply and demand now and riding the fibs. So he's definitely been one of the guys that has kind of mastered both systems and followed both of them. So it's definitely interesting.
Love that. I see somebody asked me to go over TLT. I'll show you TLT as a chart, but I'd rather go over ZB. ZB is the 30-year bond. So actually, it's actually interesting to see the difference between. But you have a full 50% retracement. This is why I'm definitely going over it. Forever brought it up. A full halfway back short that traded today in TLT. Now TLT is, I guess it's the 20-year. I thought it was, we have 20-year? I don't even know that. I thought it was the 30-year bonds. But anyway, full halfway back short, 141.72 traded to the tick here, guys. I actually think this is a really good trade, and I've been taking it. I was shorting bonds before I got on here. This is the bond chart, Okay, guys, this is ZB 30-year bonds, really important level traded here today. It's a double top, and I'm going to go to ZN after this, but there is a 50% retracement short here and it's different than TLT because TLT is the full high. We have the high here from October 8th to low that traded directly into its 50% retracement, straight down to its profit target. After it completed its profit target, we rallied all the way back. The short squeeze created from the profit target came all the way back into that halfway back short. We traded it on the 21st of November. You can see that's a high, big fat body candle there. Haven't traded it since. That was the open. And now we had a retest in it. I think it was a 3-tick front run here today, 3 or 4-tick front run here today. And in the after hours, this is actually part of my my nightly levels that I posted in my room. There was a short at 160.04. This is a potential entry into a massive downtrend in bonds. Okay, so bonds, the market and bonds sell at the same time. This is once again, guys, the quantitative easing is not working. They're loosening up the market again. They're bringing money back into the market. They even talk about releasing 50-year bonds. What do you think is going to happen when that happens? We're going lower, guys. 153.18 is that target on ZB for those of you guys who trade options or just like ETFs. TLT 131.15. Okay, and then you look at the 10-year notes. They're all set up in the same setup. Look at this setup here in the 10-year notes. We have a double top situation. This was a total short squeeze today. It was a total short squeeze on the back end of the of short squeeze straight into resistance level. Okay, this is not a breakout, right? Also, what is this? A supply zone. Okay, this is not only is it's a halfway back. These are supply zones too. So this is not only what I teach, that's what Brian teaches as well. Our downside profit target is going to be 127.05 here in the ZN, which is the Treasury notes. So I will leave it at that. But to the amateur noob, probably looks like a bull flag. Exactly. You want to see a bull flag? Look at yes, exactly. Here's a bull flag. Great Britain pound USD. Bull flag to a noob. This is an extension long to me. Okay. I mean, I know you guys I heard Brian talking earlier. You guys are bullish at Great Britain pound. This was a halfway back. Okay. What other people see as a bull flag is literally an extension and a consolidation. We had a halfway back 50%, 50%, rip-roaring rally. Where does it go? Straight to the negative 61.8% profit target. We have been consolidating below that negative 61.8% profit target. Today was the first day in that consolidation where we were able to close above that old profit target. The Great Britain pound USD is going to continue to rip out. I like that one, Brian. I actually might buy some Nadex weeklies there.
Yeah, like I said, I think it just got beat up way too much, and like I said, with currencies right now, on the news side of things, no news is good news. So when Brexit was all over the place, it was just getting beat, upright, left, right, and sideways, and then you don't hear anything, and all the pound strength came back again. Like I said, I think it artificially got beat up for no reason, and again, it was hitting good zones, and again, it was doing impulse correction, and putting some healthy moves in. So.
Mm-hmm. And we, it's these patterns, guys. It's just the same stuff, different day, right? Same stuff, different day. The biggest thing is just being patient and waiting for the moves that are clear and obvious. And guys, so just so you know, my pound upside target on this extension is 131.13. So I don't know where you guys have it, but 131.13 is where we're gonna go on this bull flag breakout. And realistically, let's go to a multi. I mean, if you go we are going to be breaking out of, we are at the bottom of this massive range, and we are going to be breaking out of this downtrend if we can really start getting above these levels, possibly in 2020 or 2021. I mean, there's some huge currency trends developing out there right now. I actually been watching a couple pairs. They were like, I feel like we're winding up. We're winding up though.
Yeah, I mean unfortunately that's what it's been like with Brexit. We were having 300 pip move days, and then all of a sudden everything gets pushed back and it just goes dead on us. Like it's just like just nothing. So it's kind of like I'm ready for business back to usual. Give us the trends that currency is known for, and just continue to ride them. So, you want to jump over and do the indices real quick?
Yeah, for sure. I will jump onto the this is just one thing I definitely want to go over while I'm here is the correlation of the VIX to the S&P. Now I've been talking about a lot about this in my morning trade plan. So you guys can check them out on YouTube. Just startup trading on YouTube. Just thanks to Brian, got that domain locked down today, or the YouTube.
I could have taken it, but I figured, what do I know about startup trading?
It was very nice of you. I was actually waiting to do that, and I was like, I thought, all right, whatever.
Yeah.
All right, cool.
I got your
So,
back. I got your back. You know it.
yeah, I know you do. I know you do. All right, guys. So, like the VIX, right? So, most of you guys have probably heard of the VIX. Maybe some of you guys trade VIX futures, but I want to talk about one of the most important correlations going on in the market right now that nobody's talking about. And that is the correlation. And I went over this. I did a big video on this last week when we traded this level. When the VIX futures roll, the market has been topping. Okay? Pay attention here. Go back and look at this after we're done because, I think we only got less than 5 minutes left or a little bit more than that maybe. But when the VIX contract futures have been rolling, the indexes have been selling off. And there's a reason behind that. The reason behind that is so the VIX is a hedging instrument, right? I mean, it's a fear of volatility, et cetera, et cetera. When we roll, the VIX is automatically repriced higher. So if you actually look at the VIX and the rolls that it's had, this is one of the most consistent themes out there, and actually one of the most predictable trades that we've had in the last 2 years. Ever since the VIX explosion, okay, I think it was like February of 2018, we have been doing this pattern in the VIX. It's absolutely amazing. So these green lines on my chart represent the rollover. So when futures roll in the VIX, but one of the things you'll see, so the massive sell-off in August, okay, what happened there? We rolled over. What did we do after that? Traded a 50% retracement. The VIX went from 14 to 23 in like 2 weeks, not even. Okay? What do we do the next time the VIX rolled over? Traded it halfway back. Where did we go? Straight up to targets. And the market sold off. Then in September, VIX rolls over. What do? We trade it halfway back. Where do we go? Straight to targets. Market sells off. Now, this example in October here is probably one of the few ones that I can't find where there was a participation. Let me delete some of these draws because it's getting a little sloppy. There was participation on the halfway back long after the roll. Okay, and that was on the 28th, but we did end up going right through it. Now, what has just happened is the VIX rolled over last week. We consolidated at our 50% retracement long. The VIX went straight to target today. Okay, straight to target today. And when did the S&P stop selling off? When the VIX hit its profit target. When the VIX hit its profit target on its longs at 1675, the ES stopped selling off this morning. And that's not because there's, support or whatever in the ES. It's because there is so many hedges correlated to the VIX and the volatility expansion of the market that automatically will just stop when you will hit those profit targets. Now, the one thing that you guys need to look for, and I'm going to let this kind of be my last note for the night, going into tomorrow is there's going to be another setup. And it's going to happen possibly tomorrow, maybe Thursday, but it's the low of the week. So Monday's low, too high in the VIX, call it 1540 rounded up. When the VIX trades 1540, whatever the resistance level is in the S&P 500, I'm going to be looking for a short. So that could be, I'm going to swing over to the ES now. This is the S&P 500. That could be the full halfway back short. Okay, which is at like 13 quarter. It could be there. It could be, I don't know where the S&P is going to be when the VIX trades its long setup, but wherever the S&P is when the VIX trades its long setup, I'm going to be looking for an entry short. There's a couple of variations of different sequences you could draw, but we are going to continue to squeeze in the indexes until the VIX trades its next long setup. And when the VIX trades its long setup, automatically the ES is going to sell off. This is one of the most consistent themes that nobody's talking about. You just heard it right here. All right, I don't have a Series 7. I have nothing. I got my brain. Actually, I had a 56 for a while. But to answer that question, basically a lot of math. Exactly. I don't even know how it's calculated, and to be honest, it doesn't matter. It doesn't matter how it's calculated.
I had a
It's
7.
not going to help you
Trust me,
trade.
99.9% of the people that have a 7 have no idea what the VIX even is. So
Yeah, as long as you know what it is, you don't need to know how it's calculated. I mean, to be honest, I don't even know how the S&P 500 is calculated. I mean, like, yeah, simply put, it's the value of the basket of 500 stocks, but it's like how? Like, are they weighted evenly? I don't really know.
but at the end of the day, Jack, that's a great question. But at the end of the day, does it matter? No.
It doesn't matter. Focus on what matters.
Yeah, you're here to make money. All the background information is great, but you know that if you sell here and it goes down and you buy it back cheaper, you make money, and vice versa. Buy low and sell high, right?
I love it.
People making stuff way too complicated.
Way too complicated.
Are you doing much with NQ or anything else?
Yeah, let me go. I can go over the NQ. It's all the same, guys. So the indexes, it's all the same. It's going to be related to the VIX. Now, basically, we broke trend in the indexes, as you can clearly see over the last couple days. But whenever that VIX, there's a couple variations of resistance. And if you guys want, you can check out my stream tomorrow morning when I have a little more information on what goes on overnight. But the VIX, I'm anticipating NASDAQ to just trade all the way halfway back, 83.13 half. But if the VIX has to trade that support level. I don't care where any of these markets are. Like, I mean, they're going to be, trading, but unless the VIX is trading 1540, it's not going to matter. If we short squeeze into these halfway backs and the VIX has not yet touched its 50% retracement long, it's not going to matter that they're there. We're going to continue to go higher. But as soon as the VIX begins trading that 1540 level, you're going to see the reversal, because that's when the hedges are going to get put on. That's when institutions will start buying the VIX to protect their positions, and that'll automatically create a rally. And literally, I mean, it's like clockwork. So it's one of the most consistent themes out there.
Did you see in chat that somebody was talking about a flunk trade?
Yes, I didn't see who taught him.
It was James.
Who talked about it, but
it was James.
James knows them all.
I was
James has got.
Man, I was like, we're gonna have to bring those back. With startup trading, are you going to do? Is it going to be purely fib based, or are you going to do any natives in there as well?
I'm gonna. So basically, my plan is to release a couple of courses just to get off the bat. One of them is just going to be like a really very basic course so somebody who's new to trading, and then the other one is just going to be everything I know. Leg starts, swing marks, Fibonacci sequences, all of that good stuff, trend lines, demand, whatever. I don't want to take your word, but you'll maybe come in as a guest speaker with the demand zones. Yeah. Because I just call them leg starts, but.
Yeah. No, I'm just wondering. I was trying to see if the 7 different patterns are coming back again.
They're coming back. Well, that'll be in the Nadex course. I'll bring that back.
Yeah, definitely.
Those are all fib-based mostly. I mean, I think they're all fib-based.
Yeah, but like I said, I always tell people there are many different ways to get to the same destination, and you got to find the one that works best for you. And again, somebody like James and even Ernest at this point, both those guys are combining both systems together. Again, when you have something that works, you do more of it, and if you can make it a little bit better, then you're always trying to get a little bit better again and again and again. So that's what it takes, guys, to be successful in trading. So. Again, Jack, I really appreciate you coming on tonight, buddy. I'm sure everybody had a great time. Everybody's over there buying tickets for the giveaway tonight and stuff like that, and I appreciate that, guys, too. If you guys haven't gotten in the giveaway, just do ! Ticket over there, and it will track those things. Let me see how many people do we have in. We got 20 on stream now, only 9 in, so a lot of people aren't familiar with what those are. What those are for. Again, Pip Chips are something right now that people can buy personal mentoring with by watching and putting the hours in. Again. Get in there if you guys are going to be watching the channel. Like I said, hopefully we can get Jack back on more often. There you go. ! Ticket is how you get in. Yep. See, I knew everybody.
It's asking me to sign in. I don't think I probably have a Twitch account somewhere. Deep in my logins.
Probably, yeah.
Deep in my million logins I had every time.
Well, now that we figured this out, like I said, I don't think this is that
reset
hard.
2 passwords a week.
I do at least that many. Don't worry, I'm right there with you. It's like, wait, where? What is it? Which one is this? So,
this one required a special symbol.
Yeah, exactly. Yeah. No, it's the one right now that's not requiring the symbol that's making me angry. I'm like, what do you mean I can't use that symbol? I'm like, that's all my passwords. So it's messing me up. So, but hey, man, definitely, I really, really appreciate you coming on and helping out. And like I said, anytime you feel like talking charts, again, definitely, I'd love to have you guys, love you have you back. And again, as soon as everything is fully launched, let us know. And again, we will give you another another shout out and definitely get some people coming across. And guys, if you haven't already, please go over and make sure you guys like him on YouTube. As a creator, it's always helpful when people go out there and give us, subscribing to those things. Jack will be on. Jack actually does mornings. I don't because I have to get the kids off to school. But Jack is always doing analysis in the morning. So if you guys are up and
I don't have kids.
Yeah, not yet. Not yet.
I've been trying to make them. Just doesn't work.
Failure. No, but guys, if you're up in the morning, definitely jump on to Jack's stuff. I mean, obviously, high level content, very, very successful trader. Again, he's going to mention, he doesn't mention supply and demand as much, but again, he's picking more or less the same zones that I pick as well. So definitely, the more chart time you guys get in, the better traders you will be, and there's no better person out there than Jack to be able to pick some extra information up from. So again, set yourself as a routine. Watch Jack in the morning, then come over here and watch us at night. And again, that works. All right. So Jack, with that being said, I'm going to bounce back and just cover a couple quick currency pairs. If you want to bounce off the line, you can.
Cool.
It's entirely up to you. Or if you want to watch them and you want to chime in on any of them, if you're looking at them, you can do that as well. It's totally up to you, buddy.
I came from the gym, need a shower, so I'm gonna have to call it here. So.
Yeah, you'll never have kids unless you shower, so that's a good one.
Good
all right, man.
Point.
Well, I appreciate it, and again, I'll touch base with you tomorrow, man.
Cool. Later, dude.
Cool. All right, everybody. So we are going to do. Let me exit this, pull this across. Let me just run through a quick couple currency pairs real fast for you guys. Just kind of make sure that we're kind of on the same page. So you can see also again, obviously some movement on this one. In the last 4 hours, this thing is definitely taking a tank down. It actually came in right at this purple level, this pullback for the drop-based drop to the downside. This was news-based, although it wasn't very big of a spike. It was only about 9 pips, so not really a parabolic retracement kind of candidate in this case. Reason why, again, is basically because... Oh, actually, you know what? I can just switch over to the other. Same picture. It's just now candidate because we had news basically wash itself out, right? The thing about this one was again, it was a miss, but then there was an adjustment. You have one that's bad, one that's good. There's really not much you can do about that one. Again, not all of them hit, but what this one is doing is continuing to push to the downside. Now we are back into an interesting area. Just to point out on the 4 hour, you guys can see that we are into the gap area. I do expect it's going to, continue to go down for a little bit, but I think we're going to run into an area where we're probably going to consolidate, maybe go a little bit sideways, and potentially set up for kind of somewhat of a reversal off of this retracement. All right. So, I mean, the data wasn't the best for them. You're seeing the weakness now, but again, there was a gap here. The last time price was down, you can see that it was tickled with multiple wicks, and it launched forward. Look into the Aussie New Zealand. Okay, Aussie New Zealand. This one kind of had the same movement. Again, we were waiting for price to come back up. It was unable to do it. It had a nice little pop, and again, you had another entry on this one as well. You can see we had this area right here, based off of the bottom of the red. Again, we had a little bit of basing, but we really didn't have enough to really mark the candle off. And again, going across, you can see nice little push down, and it hit directly to the profit target. Again, we talked about the profit target before being right where the origin of the move is. You can see it went past it, and now we're kind of stuck at the same area. So not a horrible trade. Again, we would have liked for it to pop up to here, but we weren't able to get it. Looking at this one on the daily, again, we are sitting right now inside of an area where we have buyers. So again, will we continue this short? Not so much. At this point, I'm going to wait to see what it does. I'm going to see if it starts grinding back up again. Potential shorts for me tomorrow, one would be here, and then obviously the other one would be right back up top again. So we're looking at the 105.10, and what's the other one? 105.33, okay? Aussie dollar had a little bit less movement. Again, you guys can see this one in the last 30 minutes. Again, we had a little bit of a pop down, but very, very slow, right? And what did it do? It came right back down to kind of the bottom area here. We mentioned this the other day. Again, it's kind of the start of this move over here. And again, it's already respected it once it came through. Obviously, you got to watch this base rally, right? This is a nice little area right here. This could be a potential area where it will halt and then kind of return on us, okay? And then again, you can see that that's the start of the move. That would have been your profit target on a short. Kind of in a holding pattern right now. This one will probably get some movement tomorrow morning. And as you know, this one is also, again, it looks very, very similar to gold, right? Spike up, come across, and come right back down. It's basically gold, right? This is the proxy for gold. So again, I can, Jack's analysis obviously makes sense for this one as well, but I do expect we're going to have a little bit of a holding pattern in this area. Looking at pound Aussie, okay? Pound Aussie, you guys can see that we had a bit of a gap with that news, right? Now, interesting enough, this one actually did the same exact basically the Sunday night gap play, right? What it did is it opened here, went all the way up. At one point, it came all the way back down again, grabbed those orders, and then continued to push further. So again, the gap strategy would have absolutely worked here had you played it as well. You don't see it. It really wasn't a huge news release. And again, this pair can get a little bit more volatile. The risk in this trade, and again, had you taken the full gap, you're talking about 20 pips. Okay. Since that time, it is now moved. Let's see. I was preparing for stream, so I was unable to get into that one. Moved about 52, so not quite a 3-to-1 risk to reward ratio where you are now. You're getting close. We need to go basically to there. Okay, and there's your 3-to-1 risk to reward ratio. Had you taken that one off the gap, if you did get long in this position, at this point you would definitely, without a doubt, have your stop loss at break even. Don't let this one cost you a dime at this point, right? Now, with that being said, I am potentially looking for shorts up in this area. We talked about this area before. We came up and hit it one time, and it gave us a big push away. If I extend this across, that area will be right there. So soon after this profit target, again, I'll probably be looking to take this as a short. Smaller size position. It's only about 13 pips risk. So again, nothing too huge. Looking at the euro pound. Okay, euro pound. You guys know what this is called right here. Okay. Here's our weekend gap, right? Here's our weekend gap. We talked about this before. Popped all the way up, went to our profit target, and because of this is such a big spike, we talked about having a parabolic retracement play on it. And what did it do? It retraced all the way back down right to where we were on Friday. And then since that time is more or less just stabilized sideways, right? So at this point, we really don't have too much. Again, this was a very large spike for this pair. Again, we saw the pound strength that Jack mentioned as well. Pull this thing all the way back down again. We're kind of sitting right in the gap area again, so I'm interested to see what we'll do now. Looking to the top side, really there's nothing clean until we get back up to 85.60. There's a little bit of an area right here, but it's not the best area, right around where this blue area is. I'll take these out so you can see it a little bit better now. Right in this area, you guys can see that wick over wick right there. So little tiny bit of an area. We'll see what the catalyst is to get it in there, but right now I don't really have too much that I love on this pair. I think there's better opportunities out there. Looking at Euro Yen. Okay. Euro Yen, you can see that, again, nice push to the downside. Again, we knew this is basically all based off, the market today. This was a little bit more difficult to be able to get into. Okay, we had marked off this area, right? This was a long base. It wasn't the best area. We had one touch. We had two touches. This is number 3, got close. There's number 4, and what did it do? And again, if we don't count this one, this is number 3. Okay, number 4. It went through the top. So not necessarily surprised. There was a bit of an entry you could have taken over here. Again, not the best candle. So I didn't like this one. Didn't take this one. It was at 10 o'clock on its push up. Just wasn't my favorite kind of entry on this one, just by the way that the candles are formed. But there was an area here. If you block off this red candle, you can see that we did hit right here. And you can see exactly what we ran into and exactly the push to the downside. So it was a viable trade. Unfortunately, it didn't match up for what I was looking to do at that time. It wasn't a trade that I took. But right now it's about it basically hit, but the profit target on this one would have been right here. Had anybody been in this position today. I hope somebody grabbed it because I was unable to. Okay. Right there. All right. So there was your profit target. You would have just touched it most likely. If not, obviously you're going to hit it soon. But that's would have been, again, what you're looking to do. Right now, we're sitting in an area of demand. So for me right now, I'm not willing to take a buy out of it yet, but let's see what it does from here. Obviously we are, again, large push down. We had been talking about this one for a while. We had no type of pullback whatsoever, and it was going to be what zone did we actually hit? Well, this gave us a good one, and again, very strong impulse, nice small correction, and again, we're starting to impulse down again. But obviously, it's in a near-term downtrend into a demand zone. So again, 2 conflicting signals give you the 3 X's. That one, be cautious with trading. Euro dollar. All right. Euro dollar is up in an area where we are looking to start selling. Okay. We mentioned last night we're looking to kind of retake over this area. Again, we need some dollar strength in there, right? We need some good dollar news. Okay. Again, where we are, we're sitting up in the sell zone. We were kind of there today, and it really didn't move too much. As you guys saw on Forex Factory, we had 7 pip change in 24 hours. Again, with everything we have going on tomorrow with the non-farm employment and the ISM and crude oil, this definitely could be something that kind of shoots to the downside if it is a dollar positive news release. Now, based off of this area, again, if you are going to put a position on early, definitely make sure you have a stop in place. You got about 70 pips, 60 to 70 pips to the downside as far as what our profit target would be. If price is able to hold here and it doesn't move too much before news, potentially at 7:30, 8 o'clock a.m. Eastern Standard Time, I will be looking for some type of a Nadex binary. It is a sell zone for me right now. If I could get an out of the money cheap down there, somewhere around the I don't know, 110.40-ish area, that may be worth taking a shot tomorrow morning. Again, I got to see what it does overnight and see where we are first thing in the morning. But again, being in a supply zone before news, that typically is setting up for some good, typically a pretty good setup to be able to take a position in Nadex. For those of you that jumped on tonight because you saw the other charts and the fibs, if you guys don't have a Nadex account and you've heard about it before, you don't know anything about it, if you look lower in the profile, you'll see a button that says Nadex Demo. If you want to go check it out, it's absolutely free to get a demo. Go try it out. I definitely recommend it. If you guys are familiar with regular traditional options at all, try it out. It's US based, so it's pretty safe to trade. But again, try it in demo. So if you guys like it, this would be a great setup. Take something short on this position for tomorrow morning. Okay. Looking at pound yen. I'm going to skip through a couple of these. Okay. This kind of, again, we mentioned this yesterday, right? Talked about tops and bottoms. Here's where we were last night. This one moved 13 pips in 24 hours. Gave us a little bit of a run up, but not really much. Okay, we saw this. We had this kind of little shark tooth to the way down, right? Little, here, drop, grind sideways, nice move out, and that's been kind of its top and bottom. So not a lot of movement. Still looking for this. If we can break below this 140.90, I think we can go back down again. A target for this one to the downside is going to be sitting right here at 140.25. Okay, if we can get some type of a break. Now, not really a great 4-hour zone, unfortunately, but again, we are bracketed top to bottom. If we finally break out of the channel sideways, I'll be real happy. You guys can see, this one is just, on the daily, it's just sideways. It's just really just driving me crazy. We are down under 90. We have an 89 pip ATR right now. So it is just sucking the life out of this currency pair. All right. But again, I'd like to see a little bit of weakness in that one. Now, you can see this pound position is still moving higher, right? Still moving higher. We are up inside of this area, but I don't see any reason for it to stop right now. Again, this area has been hit 1, 2, 3, and this is number 4. Again, you know what happens at number 4. After this, we're looking for levels probably up at least another 50 pips higher from where we are. This is not the cleanest area up here, but we probably got at least another 50 pips to the top side before we're really looking for a good turn. I don't necessarily see this area holding too well. I'd be surprised if it did. Again, it just hit the area too many times. Number 4 is typically the lucky number. We're out, right? And again, you guys can even see it here on the daily. There was 1, 2, and this is the big 3. And again, technically, there's a little bit more than that from the zone here. So 1, 2, 3, and number 4. Okay, so I see this going to the top side. Looking at New Zealand dollar. All right, so yesterday, again, we needed this one to go just a little bit higher. I'd be happy if it could go just a bit higher. Again, we talked about, you guys see that the purple line here, right where my cursor is now? We talked about this yesterday, saying this is the last time that we had this big push down again. This would be an area we'd be looking to start taking some shorts, and that's kind of what held it up, right? You guys can see it here on the 30-minute. Here's the purple line, right? Price popped up, went basically sideways, dropped, and now it's having a very, very hard time going any higher. Okay, it is consolidating. The highs are the highs are definitely lower. The lows, they're kind of stuck more or less in a sideways pattern right now. I think overnight we'll start to see some movement. And again, this is another one of those positions. If we have some data that is strong U.S. news, again, this could be a drop to the downside. All right. Again, targets for this one to the downside would probably be, target 1 would probably be down here at 64.80, and target number 2 would be 64.32. Probably 64.32 is what I'd be shooting for on this one. Obviously, keep your risk low. Again, anything above the top of this, again, keep yourself out of it. This is not a Nadex-based pair, so again, you're trading this in spot currencies. But again, we got to get a read before, see what it does in the overnight and get a read beforehand. But as of right now, I'd be looking to kind of overtake this position and move back to the downside. All right, dollar Swiss. So dollar Swiss was a monster yesterday, right? Yesterday at this time, I think it was up 80. It was down like 86 pips. Today it's down about 17 from where we were, and you can see on the 30-minute, really from the low at about 11 o'clock this morning, it's just flatlined. It hasn't done much. And this is what it's been doing, right? It went from 5 till 11:30 and then flatlined. And then again, this was a 2 till about 11 and then flatlined. So at this point, we know that this one is really kind of dying at 11. All the news is early. Looking at the 4-hour, I do like this zone up top. I do think this is a great area. If we can get price back up into this area, I'd be looking to take some shorts off of it. It's probably one of the cleanest areas we've had in this pair for a while. And you can see we are still looking to this downside. And again, you guys see this line right here? If I continue this line across, look what we just happened to hit. Okay, I'll make this dark so you can see it, and I'll make the line bigger, and hit Y, and you can see exactly what we bounced off of. So that was the bottom of the channel zone that we had talked about before, and that's what kind of gave us our more or less downside target. So being at the bottom, if we come back up in here looking for a short, if it goes through the top, look for a retrace to the same zone and go to the top side. So it's kind of a retrace to this area. If it is a retrace through, then look for this and then go to that side. Okay. So these are the two kind of potential outcomes for this trade. Okay. Two different setups. All right. Looking at dollar CAD, I do expect some dollar CAD movement tomorrow just with the BOC rate statement, the overnight rate, and ISM all coupled around 10 o'clock, as well as the non-farm number at 8:30. I'm sorry, 8:15. I do expect some movement. I am hoping that our top or bottom finally gets hit in this position. Like I said, it's just been a lot of chatter sideways. Again, this is just, there's no real clean zones here. We had this one little area. It got hit pretty deeply and again, hit again. I don't think it'll hold another time. If we get a spike up or down, I am looking to take longs or shorts in Nadex on that one. Depending on, I don't know, we'll see. We'll see if it's a single spike or if it's a kind of a grind up in two candles. If it's a single spike, I may just take it in forex so I can hold it through to the week. Okay. That's kind of it with dollar CAD, and then looking at dollar yen. All right, so looking at dollar yen, you can see what did it do? We had the selling zone up top. It broke just slightly out of it and then just collapsed, retraced, collapsed, retraced. So again, very, very healthy decline, right? Impulse correction, again, downside. Now's where it's getting interesting, right? You're seeing a lot of stuff down here, and again, that maybe would cause this little pop back again. Really, I mean, that there's a lot to chop through right here. I think it will continue to push down overnight in the when the market is obviously closed. Big question will be is what do we do with this wick and what do we do with this wick? This pair has been interesting to trade news-wise because, again, what's good for the dollar isn't necessarily good for the economy. So you get one number, you see dollar strength, but economy bad, and it's been kind of counterbalancing itself. I would like it for it to get a little bit lower. There is a little tiny bit of a wick over wick in there, but, you know, like I said, it's basically been a big move, very, very small bodied candles, right? And then, boom, one move, and a couple bad candles, and then again, from basically 11 o'clock today, it has done nothing. It's the same exact spot. So we're only talking about a 10 pip range. So the range has been very, very small in this one. You can see the ATR on this one is only about 42. So it's very, very small right now. Hopefully tomorrow we'll get a little bit more movement in this one. We're about 75% of its way through its move to the way to the downside right now. So I don't know. If anything, I'm waiting for a long on the bottom side or any type of a good pullback. Like I said, it's just starting to break a little bit of a low now. But even so, you know, you're talking, what do we got? 25 pips before we start getting into this clean zone down here. So, and again, we have a level over level. So, like I said, 70% of the way through to the downside. If we can get a pullback, again, we did a push down overnight, and we use this as an area. I'll mark it off now, but like I said, we need price to continue to push to the downside. But this could be a potential area for you to get into a short.